Business financing can be an absolutely daunting thing, and it doesn't help whenever banks come courting you and working so hard to get your business only to drop you a few minutes later for reasons you don't fully understand and that don't make sense. Well, we've been in that position too. Don't ask me how I know. So JKL Works and I have partnered with two companies for very specific reasons and very specific aspects of that journey. And I want to share them with you, and I also want to make you a better choice to get funded, even if you're a startup. Watch this. In order to get this started, and before we turn you loose on our two lenders that we have here that are not banks, they're not conventional lending partners, but they're perfectly legitimate and they will help you think about some of these things going forward. But we first have to assess what kind of risk you are and get you to look at things from their point of view, even from a bank's point of view. Anybody that's lending you money, venture capital, any type of thing. People talk about going through all these investments and all these Series B investments and everything else. Well, first thing you have to do is be a good risk. So evaluate yourself. Are you a good risk? And you can do that with three questions that we start off with right now. First of all, what do you want the money for? What are you asking for money for right now? Not long term, we'll get to that in a minute. But what are you asking for in the short term for money? Is it to expand your business, an existing thing that's already happening? Do you have a startup idea that you're prepared to turn into action? Can you tie any assets to it? Can you tie anything physical to it, such as business performance or accounts receivable or some other things? What can you tie to that? But what do you need the money for right now? And how does that look to a prospective investor, somebody who's going to be lending you that money? The second question is almost as important, if not more important. How quickly can you pay it back? What is your plan to pay it back? And you might say, well, I'm borrowing something long term because I'm going to need the money for ongoing. Okay, that may factor into what you're doing. But the sooner you can pay it back, or the sooner you have the potential to pay it back in the short term, the better off you'll be. Why? Because then you can go get more money if you need more money. You then have a track record, and that's what we're trying to establish. So if you can establish a track record of borrowing money in the short term and then paying it back at a relatively quick rate, because you have that ability and you went into it with that in mind, a lender is going to look at that. So how quickly can you pay it back is the second question. And the third question, is there anything in your past or in the past of your team or in the past of your company that could be a problem? Take a long look at that before you go shopping for money. Is there any bankruptcy? Either if with your business, hopefully not, or if in the past of your principals. None of us want to sign a personal guarantee. We shied away from so many lending offers because we refused to sign a personal guarantee. And as you should. However, you still have to make sure that you are a good risk and you have a track record, a personal track record, if possible, of paying things back. Also, if you can supply some money up front to help with this, or some sort of asset to secure the loan, that will help too. Any of those things, business performance. So if your business has been in business for at least 2 years, 3 years is better or more, but 2 years can do. Do you have a lot of throughput? Do you bring in a lot of activity? Where you have a lot of debts, but at the same time you're paying them out almost as fast as you bring them in. And so it's this, maybe you're holding money for 3 months, 6 months, a year at the most, something like that, because you're processing it right through as orders come through to satisfy it, what you lent money for. That's a fantastic way of having a track record. So, but is there anything in between in that process that might be suspicious and fishy to somebody who's, again, lending you money? So look at this as the opportunity to clean up anything that's in order. personal credit scores of all the principals involved, because they will be involved, especially if it's a corporation. Yes, you have some shelter there, but a personal credit rating above 700 is ideal. 650 if you must. And you also will have a business credit rating. Do you have a track record of having a business credit rating? And if so, what does that mean? And I don't mean, paying for the A plus rating at the Better Business Bureau or Dun and Bradstreet or any of those. Those are paid engagements, honestly. And those companies sell things like that. And yes, they're somewhat earned in the case of the Better Business Bureau, but not as much as you might think. So do you actually have a track record that's a business credit rating that you can borrow against and you can use as leverage when you're asking for money? There are companies that are far more flexible in lending money than you might think, but you have to be a good investment. So let's talk about the first one of those that we have. It's actually a marketplace, and it's by a company called 7 Figures Credit. The focus of 7 Figures Credit and the reason that I decided to partner with them is 3 reasons. Number one, first of all, they have a way that you can determine your credit score, your credit worthiness, without dinging any of your credit at all. They have partnered with Experian, one of the 3 major credit reporting agencies, to do a soft pull on your credit. So if you click on the link that we have at our website, jkoworks.com, and you see the link there below, you fill out a quick form. It does a soft pull on your credit. It does not affect you at all. Nobody knows you're looking. Nobody knows you're exploring anything, but this is just personal credit. So you know where you stand right off the bat, because particularly if you're a small business, if you're a startup, startups are kind of what they focus on, but they don't do exclusively. But smaller businesses are their wheelhouse. So if you want to know where you stand, your personal credit will factor into it at some point if you're a smaller entity. And so you need to know what your credit score is, and they can help you determine that. And again, 700 is the ideal number you would like to have in terms of your credit. If you're 650 and above, that can still work. There can still be options. It's not the worst thing in the world, but as soon as you can, get toward repairing that credit and getting it above that 700 mark. And that will make all the sense in the world. We don't all want to bow at the altar of the mighty FICO, as Dave Ramsey says, but nonetheless, it's something we still have to deal with. It is still the sandbox we have to play in right now. Second thing that makes them unique is that they send you, as a smaller business, and they again can do a little larger, but they have their limitations. Their focus is smaller businesses, probably under the $200,000 and really even the $100,000 lending limit on a regular basis. But they steer you towards lines of credit and establishing lines of credit. For a business, if you didn't know, this is gold. This is what you want, because it's something you can borrow against again and again and again, as long as you're paying it back. You can continue to borrow against it for any needs that you have. And that line of credit, you've already worked to secure that, and so it stays in place, and it's a good thing. And they also encourage multiple lines of credit. That's not a bad thing at all. The more you can, there's probably a limit to the number of lines that you can have, and the financial advisor you work with will help you in that direction, especially here at 7 Figures. But one of the things that if you can establish multiple lines of credit for multiple reasons, maybe you have one for specific production lines that you have. Maybe you have one that's for big projects over here, for something that happens to handle cost outlays, and so then you get those. Maybe you have another line of credit to start new products or new services and to get them going to see if it gets paid back. So there's lots of reasons to have multiple lines of credit in case something happens. So the more the merrier. The third thing that kind of makes them unique as opposed to the other group that we're going to talk about in a few minutes here at 7 Figures is that they do something called, and there's some controversy around this, especially if you go searching for it on Google, credit card stacking. Now, there's a lot of gray area there. There's a lot of dark area there if it's done wrong, but ethical credit card stacking can make a difference for a small business. Absolutely. It's for a startup, it's for a small business, and then at some point you leave it and you go on to more secured lines of credit. But if you're just getting started on a project or you're a fringe risk, this is something you can do. But it's very much dependent upon either your personal line, your personal credit score, or the commercial lines that you have built up in your company. And so they want to see, that's when they really want to see that minimum credit score of 700 and the 45%, the less than 45% credit utilization. So if less than 45% of your income is, well, I'm not entirely sure how that works, but they will go through that with you. That's why we've partnered with them to make this happen. And so that's something that you really want to focus on with them, is that credit utilization. But credit card stacking is taking credit cards, commercial credit cards, linking them together and creating a line of credit based on those. But you have to really be able to pay it back just like a credit card. And you get that interest free for, say, 6 months or a year. So if you're looking for something that's short-term loan, it's fabulous for that. But you have to be willing and able to pay it off in that time frame, and then keep that line open and you can keep going. Not everybody wants to deal with credit card stacking. It has its issues, but Seven Figures does. And that's one of the ways that they can really stand out, and it makes them special if you're a startup business or you're wanting to do something that's, you're an established business, but you're wanting to do something, maybe a new product or something that's a little bit fringe, and you're not sure if it's going to work or not. This is a great opportunity for you to go down that road and now not have any long-term commitment on the credit card stacking that makes that happen. The second company is called Rock Financial. That's ROK Financial that we have chosen to partner with. And they have a unique niche and distinction as well, just like Seven Figures does, where Seven Figures focuses on a little smaller groups. They do the credit card stacking as an option, and they have a marketplace of options behind the scenes once you're approved. Rock takes a little bit different perspective. They have very specific relationships with banks and lending institutions of all types, and that's what they leverage. And as a result, they can actually lend quite a bit more money if it's warranted and if it's possible to companies as they can scale up. So they can do several $1 million deals where Seven Figures might be capped out at something a little bit higher. However, as a part of this, they offer 3 tips of different things that we can do, and this sort of plays into what we've been talking about all along. And I'm going to look at this through the lens of equipment financing, because that's something they just brought around, and it really speaks to my past as well, dealing with equipment and having to deal with connecting to people to get it financed. Say if you have over-the-road trucks and different things, which is from my past. So this is something that I hope will help in thinking about a little bit larger asks for lending money. And it's something that will help your standing when you decide to connect with Rock through us for that opportunity. The first is history. Now, they can, just like Seven Figures, they can and will lend money to startups all day long. However, they're a little bit more discerning because they don't have the credit card option. So this kind of plays into the third tip I'm going to talk about in a second. But something that lending institutions don't always tell you is that if you have a previous track record from the company you were at before, you can leverage that as a part of, even if you're a startup, as a part of starting that business. Say you're a doctor who's been a part of a group practice for a while but has a good track record with them, and decides to strike out on your own and start your own practice and start your own clinics and things going on. Well, all that factors in, all that history factors in, and so it can help you get that leg up and possibly work in your favor to get you going if you have a good track record of where you came from, and the business has a good track record of where you came from. Even if you were not involved in the financial decisions, and the choices that were made, you still have an option, you still have a say in what's going on there, and it affects your credit performance as well. So that's something that not everybody takes into account, but it works in your favor. The second thing is to be frugal in what you're asking for. In the case of equipment, if you can leverage used equipment and buy it and repurpose it, that's a whole lot better, because in particularly like in construction equipment, just like a car, when you drive a car off the lot, a brand new car, it instantly loses 30% of its value, 20 to 30% of its value, just for driving it off. It's now become used, and that has gone down. Well, the same goes for equipment as well. So if you depreciate that value out already, and you go get something that's used but can be refurbished or is still in good condition, or has potentially a long use life if it's well taken care of, and you're asking for money to fund that, that will go over well when you're starting a relationship, and that's just in equipment. But being frugal in your ask is always a good thing. Don't go out just because you're getting, you're asking for money, and go get the top of the line stuff just to have the top of the line status stuff. Spend a little bit less money and a little bit notched down, but be, frugal in what you're doing. Be responsible in the money that you're asking for. It's not carte blanche to go do something else with that money. That again, we'll get to the third point we'll talk about in a second. So it's not just in equipment that we're talking about this, but it certainly speaks to equipment lending. But it's good practice anyway. Map out what you're going to use the money for that you're asking for, and be frugal in all opportunities in that realm, and that will be noticed by the lender, and that will make a difference in whether or not they're willing to lend the money. If it comes to a situation where you're sort of on the edge of qualifying, or you're not on the edge of qualifying, they will look at what you're actually using the money for, and that will make a world of difference to them. And the third and final point I've been teasing the entire time, including throughout the whole video, is be a good risk. If it even looks shady and they smell it and they think it's shady, they will not lend you the money, especially now. So find every way possible to be a good borrower. Set yourself up as proving that you can pay back a loan. Prove that you really can make the difference you say you can make in the business that you're in. Be aware that some of these, they're not very willing to lend to CBD at the moment. They're not very willing to lend to businesses that can't show any progress or any sign of payback, just because you think they're needed services, and perhaps they are. That's not the way a lender thinks in life. So be aware of that and do everything possible to mitigate that, even if it means giving up some concessions, even if it means paying a little higher rate in the beginning, even if it means having to have more money up front to offset that risk. If you're a better lend, that will be proven out over time. If you actually do the things you say you're going to do, and you get the results you say you're going to get, this is a relationship that you start with either one of these companies and either one of these lenders and these ongoing lenders. Just like you're building a line of credit that's long-term, you're building a relationship with lenders. And if you have a good track record with them, they will relax their restrictions. Really, they will. And they will start doing that over time, and you will build that relationship, and it will be something special. And you will have money for the things you need to build the business of your hopes and your dreams and your realities, because the results are proving it out. And you're getting to live out the vision that you wanted to live out, in the ways that you want to make a difference for people out there. And that will make all the difference to these lenders as well, and make something special for you going forward. And you truly can change the world if that's what you want to do, or at least you're part of it. So I hope those tips help you. I hope they make a difference for you. And at the very least, I hope they get you to see things from a different perspective. It's not just your selfish one as the borrower. You have to look at things from a lending perspective. And you also get to realize that there are institutions, there are investors, there are people out there that are willing to lend you money. Even banks. There are some banks that are willing to lend you money. But you have to be bankable. You have to be able to pay that back. You have to be that good investment that you're wanting them to invest. You have to be an investment worth investing in. You have to be a leader worth following, as they say. So I hope these opportunities help you. And now it's your turn. If business funding is something that you need, then we have it set up for you. You can go to jklworks.com and find the business funding section. And you can go directly to either one of these lenders as it makes sense to you. These are affiliate relationships that we have. So if you do end up getting funded, we will get and I will get a piece of that. So thank you very much in advance. A small piece, but nonetheless, I will get one. And so, but beyond that, that's all I know about you. I'll have your contact information to follow up, but your credit history, your lending activity, your different things like that, those are not things that I will ever know. That is between you and the lenders. And these two companies that stand in the middle that are there to help facilitate and make this happen. They want to lend you money. They want to be different. They don't want to be the say no to everything but tease you type of situation. But you have to be that good investment. You can either go to jklworks.com or click the link that you see on the page here to go directly there, or in the show notes as appropriate in the description. So I do hope you'll take advantage of that. At the very least, go get your soft credit pull from 7 figures, because that's what that form does. And then you can know with absolutely no obligation to do anything. But at least you'll know where you stand, and that is powerful as you're running your business and you're ramping things up and making things happen. So I wish you all the success, and hope to see you in a little bit further relationship or in the next video. Thanks for watching.